Hello, team. Welcome to another weekly sales meeting. We got a lot to cover, so I'm going to get right into it. I'm going to first start off with talking about a little bit about the state of the industry. So yesterday, basically yesterday and the day before, we saw two lenders come out and report earnings. Actually, three. We saw Rocket, the number one lender in the country. We saw UWM, the number two lender in the country, and we saw Loan Depot, the number three lender in the country. And this was a clear tale of how margin compression is impacting the different channels in the mortgage industry. So on the one side of Rocket, we're seeing them 90% down year over year earnings, okay? Massive drop in earnings. Then on the Loan Depot side, we're seeing they lost $3.7 million a day in Q2. That's an unprecedented number, $220 million they lost in Q2. These are two companies that made billions of dollars over the last couple years. So then you have UWM, who came out and they made $220 million for the quarter, bringing their year-to-date earnings up to over $500 million. And there's a clear why. Its business model matters, and business model is disproportionately impacted based upon margin compression. So what is margin compression? This is a continued theme. So margin compression is when is always about transitioning out of cycles. So like 2020, 2021, the industry was a $4 trillion a year mortgage industry, okay, for each of those years. We're in a situation where in a $4 trillion a year industry, everybody's busy as can be. You have to hire a lot of underwriters, a lot of processors. Everybody's hiring like mad. Nobody's focused on cost. Nobody's focused on what, they're just trying to get people in the door, signing bonuses, doing anything they do get people in the door because they're trying to keep up with the volume. And because there's so much volume out there, they keep raising their margins. So they're raising margins, but they're also raising their cost structure with their margins. And while in those environments where things are so good that the margins will make you a lot of money, even though you've increased your cost structure substantially, as they transition to a completely different environment, an environment where rates went up and demand completely went away, so we had excess capacity, too many underwriters, too many processors, not enough loans to underwrite, the first thing that happens is those lenders, instead of immediately downsizing or laying people off, they try to lower their margins for the purpose of keeping loans coming in the door. And that creates a chain of events where everybody starts lowering their margins. And that's what we call margin compression. The problem with this structure is the companies that have those high cost structures cannot lower their margins at the same rate of lean companies like UMortgage and UWM, companies that have a very low lean cost structure. So what happens is we see a massive disparity start to develop between the interest rates that we're able to offer consumers and the interest rates they're able to offer consumers. In Q1, it was probably about a half a point to 3/4 of a point. In Q2, it was up to a point and a quarter. Now we're seeing it as much as 1.5%, 1.75% difference between the rate that a consumer would get with us and a consumer would get with one of those retail lenders for the same exact mortgage. So margin compression is not something you heal in a very short period of time. It requires a lot of cost reduction activities. It requires a lot of behavior changes. And the reality of the situation is while you're trying to do all those cost reductions and those behavior changes, the loan originators who joined your company because you had a robust business and a robust back office start to get disengaged. They start to say, I can't sell these rates. I need to go somewhere more competitive. I don't like the fact that you're firing my underwriter or my processor. I'm going to go somewhere else where they're not doing those things. So this is playing out right now in a big way in Q2, starting Q2, but really Q3 is where we're seeing it to happen in a big way. Loan Depot announced they're going to lay off between 5,000 and 7,000 employees. I mean, that's nearly 70% of their overall workforce. That's a big number. So, what my theory and what my focus is has been with UMortgage since day one is cost matters. Keeping your cost structure in line, building for scale. The reason why we're investing in Workplace and Knowledge Library and all these self-serve resources is for the purpose of avoiding the jobs that would fill those things in a typical retail lender. If you have an entire support team that's doing what the Knowledge Library does, or if you have an entire support team that's doing what we do through our Workplace chat by answering questions, going over structuring scenarios and all those things, like we've replaced those things by insourcing it through our skills and our experience and through our community at the expense of having to have all that cost in our cost structure. And that's going to keep us lean for as long as we can possibly be around. So, my focus is maintain a strong cost structure. Make sure that we're always the most competitively priced for consumers. Make sure we can compete against anybody to give the consumer the best rate, and never, ever put ourselves in a position where we're letting overrides and excess layers of management put ourselves in a position where we're just like every other retail lender. So that's the differentiator. It's the focus, it's the intentional nature which we're building our platform. I know everybody here is focused on making sure that we're doing our part to maintain that competitive edge. But as we go forward, the opportunity is to grow our teams with more loan originators coming from the retail channel. So we'll talk a little bit more about that, but I want to transition into why this is so important to consumers right now. I mentioned it last week, but it's a big deal. And I spent some time this week talking to real estate agents because real estate agents can't wrap their heads around this. And it's really important that we're doing our part to educate them. It's got to be part of our weekly communications to our audience. It can be consumer facing, but it also needs to be real estate agent facing. And every single time I explain to a real estate agent that on a $400,000 borrower or on a $400,000 mortgage, a consumer that's qualified at what the retail rates are at today, which is about 1.25% in full above what we're at, if they were able to work, if they work with us, they increase their buying power by 15% on a $400,000 transaction. So they'd go to $460,000 mortgage just by working with us. Same mortgage, same payment, but they're now in a situation where they're dropping the rate by 1.25%, so they're able to borrow 15% more by using UMortgage. Now, of course, they could just borrow less and save more money, but for real estate agents, like knowing our audiences, consumers want lower rates because they want to save, which is very, very important. Real estate agents want consumers to have buying power in a competitive market. So being able to show 15% difference by working with a mortgage broker versus working with one of these retail lenders at these high cost structures. So, margin compression is impacting where loan originators want to work, but margin compression is also impacting consumer behavior, and it's also impacting the way realtors drive their business and who they refer their business to. This is one of the most important things that we can focus on. Just like speed is important and our NPS score is important, buying power that's created through reduction in interest rate is one of our key things that we have to be driving. It's going to win us relationships, but it's also going to help real estate agents find consumers homes that are currently out of their price range. Third thing here I want to talk about, I posted on it this morning, really want to talk about the 5-step process for success. And this is not like big goals. This isn't about like, hey, my goal for the year is to go from 50 million to 80 million, and here's the process I'm going to apply. This is more about iterative processes, week over week, day over day. It's something we apply in everything we do from a business development perspective and a marketing perspective. So, for example, we've gone through many iterations of our weekly recruiting call. From when we started, we were getting a handful of people on it. And we sat there and we stuck to, hey, listen, we're going to dial in our marketing. We're going to dial in our messaging. We're going to, focus on getting our LOs to help us, extend this marketing materials and this communications out to their audiences. Like each week we made slight changes. And the whole focus was, we know we're going to get there, but we got to stick to the process that has always served us to get there. So, when we think about step one, define your goal. Our goal is to grow by X amount of loan officers. For this quarter, to grow by 100 loan officers. Okay, so that's the goal. Now, what problems stand in the way of us achieving that goal? And the truth of the matter is, what stands in the way is our ability to get in front of them. So we sit there and we say, okay, identify your problems, identify the things that are going to be problematic to get you to that 100 loan officers for the quarter. And then what are you going to do about it? How are you going to get around those problems? That's really step 3 is, being able to, identify a path to get around these problems. So for me, it was like, well, if we got to get in front of them, the virtual event that we do on Thursdays isn't going to be the answer. So what do? We're going to do an event in Atlanta. We're going to do an event in Miami. We're going to do an event in Chicago. Like, we're going to do live events because that's the way that we're going to be able to get the local people to come out, meet us, get in front of them. And just like we're doing later this week in Miami, we got 54 people registered for that event. So if our goal is to get to 100, we got 54 there. We got 20 that came to the Atlanta event. Like, we're going to get there now. But if we stuck to what we were originally doing, we knew we weren't going to get there. So identifying your problems and then coming back and designing a plan that gets you to overcome those problems is part of this 5-step process. And the last thing, of course, is executing week over week. When we go down to Miami, hey, listen, we're already halfway through the quarter. We've added 40 LOs for the quarter so far. Okay, we're trying to add another 60. Well, we got 50 some odd coming to the event. We got to execute. We got to show the experience. We got to make sure we go over the NPS score. We got to make sure we build relationships. Like, we got to convert. And this applies to everything. This applies to events. This applies to real estate agents. You can apply this to everything. It's exactly what we've built. Every single one of the things we do week over week. Every process comes back to this 5-step process. So I shared the post this morning. I put a couple resources in there, a worksheet for you to apply to your week to week or day to day, an article that kind of ties it all together and gives you some depth. I highly recommend giving it a shot. It has worked for me time and time again. It's worked for each of our departments as they do their weekly and quarterly goals. And this is how we grow. This is how we get better every day. So I'm going to hand it off and I'll be back shortly.
Hi, I'm Kristen Morgan with There's No Place Like Home Mortgage team. And so I am super excited that I am officially now a part of UMortgage. I am definitely coming from the retail side. I started my career originating loans 5 years ago. But prior to this, I worked in a credit union banking environment, retail, where I was like forward facing with clients all the time. And, just one day I had this really random thought about what would it take for me to do mortgages. And so I reached out to someone and asked a few questions. They told me how to get my license. I got started and like the rest is history. So, I have been in a retail model for the last 5 years and I've done pretty well. Like started doing loans. And when I started this, I wanted to only close like 3 or 4 loans. And I think my highest month count was like 32 loans in 1 month. And so this has just been an incredible experience for me in the last 5 years. And so I have made this shift and change from going out of the retail environment to coming into this incredible hybrid broker model. And honestly, my reason why is because I've just reached a point in my career where being able to add value to my clients, not just from a standpoint of, oh, here's a loan and here's a rate, it just wasn't fitting who I am ultimately. And I needed to be able to have a little bit more reach and a little bit more depth, but also be able to give my clients like the best like opportunity to get into a home with the lowest rate and lowest cost. And I'll be honest, until about 6 weeks ago, I didn't even realize that what I was adding and what I was offering to my clients wasn't even the best that was out there. I was just under this umbrella of thinking that, oh, this is what the market shows and this is all there is to have. And I quickly learned that that was not the case. And so I just on a hunch, after being recruited heavily from several different companies, on a hunch I didn't have peace. Like, just to be honest, I was talking to several retail models and could not get peace about what they were offering. And while they all had their incredible different platforms and different pros and cons, I reached out to Anthony and just said, hey, what are the odds of me getting on the phone with you? And he told me they were really good. And so we started having phone conversations, and like, no kidding, probably 2 weeks later, I was like, I'm in, I'm done, I'm in. I had the opportunity to like filter one loan through their pipeline, and no kidding, 48 hours later, I was like, I'm going to be turning my resignation. The just incredible process that's been built here so far, the UMortgage, has been super impressive. And from someone who came from a corporate environment, I understand like processes and things like that. But now that I'm here, the next thing is like, how do I plan to grow? I mean, I really, truly intend to use my brand and my platform that I already have to really educate people that brokers are better, and really start sending this message out really hardcore that not only was I not under the right impression about what there is to offer, now that I truly have a full understanding, I can just kind of start educating people. If you go back, you're always going to see that I've done videos, and I really do like to educate my borrowers and just people in general. But now I'm going to take that education piece and really align it with who I am, because it's one thing to teach people something of what you know, but I believe in that saying, you do better until you know better. And then once you know better, you do better. And that's kind of the motto that I'm taking. So right now we have this incredible event plan that we've been planning, and we're going to be inviting a ton of agents in, showing them the benefits of working with me now that I'm in this broker model. And then we have an incredible platform that's already built for how we cultivate those relationships. So I feel like I've just aligned with everything that I could have ever wanted for my business: options, best rates, lowest cost, and then now this incredible process as well. So I'm just super excited, and I'm just going to dig deep. I mean, I think that's all I really can do at this point is just dig deep into who I am, what my purpose is, and just live that out every day. And so for me, like what's next is I'm just headed for excellence. I'm headed for, making sure that I can expand my reach and that any agent that comes across me or any agent that's willing to work with us understands that we're not just here to close a loan, but that we are here to build longevity and relationships and create a culture and an environment in which when we work with their clients are always going to be coming back full circle and referring us business because that's how my model's always been built. But we're really going to be deepening that with the options and the best rates and the lowest cost that UMortgage offers. And so I'm super excited to be a part of this company. I know that it's a growing company, it's a thriving company, and I'm ready to ride the wave up. And I just really appreciate you guys even being willing to ask me about what I'm going to be doing here. But thank you. And I look forward to seeing what we do as a team, as a company, and just across the nation.
Good morning, UMortgage. My name is Kevin Allen. I'm a senior capital markets analyst here in our Philadelphia corporate office. And today I'm going to talk to you guys about three things. First is going to be our relationship with the submissions team, our relationship being the capital markets team and the lock desk. The second thing is going to be our service level agreements, our SLAs/turn times that can be found in our knowledge library. And the third thing is going to be extensions and relocks during this volatile rate market time period. So the first thing I want to talk to you guys about is our relationship with the submissions team. So frequently when new loan officers come on board, I see as not, I don't want to call it a mistake, just maybe just not understanding the process immediately. And that can be in turn reflected on what we need to do better for you guys up front. But the biggest thing that I want to point out to you as a loan officer is that the lock desk does not register/submit files. So that's always going to go through your submissions team. That's always going to go through your loan coordinator. So when you have a lock that's ready to go, if the file is not registered in the lender portal and you tag the lock desk, you're going to get a message or an email right back from us advising you to tag your loan coordinator and submissions team. Frequently, we'll also put them on that thread for you guys. But just so we have an understanding of that, we cannot lock it until it's in the lender portal. And I know we want to get things locked as quickly as we can, especially right now in this market. So remember, the best practice is to tag the submissions team, your loan coordinator, and then they will take it from there and they'll own it throughout the process and we'll get it registered and locked for you as quickly as possible. The second thing, kind of building off of that, is our service level agreements, our turn times. These can be found in our knowledge library, and a team member right now will be attaching the link in the chat or the comments below. So one thing I wanted to point out to you guys is the lock desk typically is open till 8 o'clock on weekdays, and on weekends right now we are working on weekend coverage. However, if it's not locked the morning of, say, Saturday morning, it will be locked by Sunday evening. So again, a team member is going to drop the link to our service level agreements and our turn times that can be found in our workplace knowledge library in the comments below. You'll see that our turn times during the day are quicker than on the evenings. However, we'll get back to you as soon as we can on the evenings. Some of us might be driving home or taking the train. And then the third thing that I wanted to talk to you guys about is extensions and relocks. So right now, when you are getting the important lock expiration today, whatever today's date is, and then the generic, contact lock desk UMortgage with your funding date, or your closing date, so we can accurately extend this loan through funding. You might get in your reply, hey, it's actually cheaper to relock the file right now. So, and we'll explain that to you from a lock desk perspective, but I would like to use UWM as an example just very quickly. The first extension at UWM, it costs 2.5 bips a day. So if I'm doing 2.5 bips a day, I get 4 days out of that. Yes, I can do that quick math without my calculator. Impressive, I know. But a relock at UWM, if we go off of worst case pricing, and worst case pricing just so happens to be from the original lock date, just say we're on a good rate day, rates drop drastically today, that relock fee is only 10 bips. And typically we can get 30 days out of it. So for those of you that have your calculators out and you're doing the math right now, obviously 30 days is better than 4. So when you hear relock, it might not sound as great. However, and there are certain situations where the lock desk will bring it up to you guys that we think it would be more beneficial to ourselves as a company and the borrower, because we're going to be spending less money to do so. So that's all I got for you guys today. First thing was the relationship between the capital markets lock desk and the submissions team. Remember to tag your submissions team and the loan coordinator when you want to file to be registered in order for the lock desk to lock it. The second thing is our SLAs, which can be found in our knowledge library. And the third thing is extensions and relocks. If you ever have any questions about that or any costs or regarding costs on that, just let us know and we'll walk you through it. Thanks, guys, and I'll pass it off to the next person. See you next time.
Good morning, UMortgage. Adam West here, coming to you from Utah. And what an honor it is to be sandwiched between Kevin Allen and Kyle Kohler. I just am so ecstatic that I was able to share it today with them. Okay, I'm talking about my approach to initial pre-approval or initial meetings with first-time home buyers and how to best lock them down and how to best help get some referrals out of them. So first and foremost, I always talk about this. Be authentic. Be yourself. Be real. Don't be a robot. Don't be weird. Don't be all analytical and talk about mortgages the entire time, because you're human before you're a loan officer. So another thing, cater to their needs. Like really hold their hand. Be available, be flexible, and be urgent. I think I saw a video of Amr talking about that. Be flexible and create urgency. This is something that you need. You want them to be involved with you every step of the way. And so getting pay stubs in, like, come on, get those in by tonight. Or any little thing you need to get a WVOE, find out who HR is. Do whatever you can, be urgent, get this done ASAP. There's a very good chance they're going to be shopping you. But your urgency and your knowledge about mortgages and about them buying a house is going to trump other people. So yeah, be more than a mortgage guy or gal. You want to differentiate yourself as being their financial advisor, everything real estate related. So you are not here for one deal. You are here for the next deal. Talk about the refinance that you will get them in the next couple of years. Talk about that first investment property. If they're interested in investing, talk about how you do those as well. Talk about how you're also here for their second home purchase or their third home purchase or whatever else. You're here to help their family, their friends, every step of the way. You're available for them. Speak with them about their goals. And this is like all before you actually start talking about their pre-approval. Talk to them about their goals and their dreams and their hopes. And do they have pets? Do they need a yard? Do they not really want yard work? They'd rather be in a condo. Get all of this up front. Their timeline, their expectations of when they expect to buy a house. These are all very, very important things that you need to cover with any buyer, but with a first-time home buyer specifically, get in the nitty-gritty with them and make it a fun experience. Getting pre-approved is not as scary as most people think, and you're hopefully going to be that first person or that second or third person they're talking to really ease their concerns and help them along the way. Oh yes, find them on social media. If you can, find them on Facebook or Instagram. And if they're active on there, comment on their stuff. They would love that. Just be like, hey, it looks so fun. Like whatever, someone's on vacation. Looks awesome, really cool. They're going to be like, oh, Adam West, that's my loan guy. That's really cool. It makes you more of a human, more of a real person instead of just their finance guy. And then that's going to make it sticky forevermore. If you're making videos and consistently posting stuff on social media about mortgages, sure, they bought a house with you in 2022, but when they're ready to refi later on, oh my, how many times have they seen your face pop up on their feed? That's huge. Okay, last thing, give them extra nuggets of wisdom. So yes, it's one thing about interest rates and closing costs. That's cool. Any jabroni out there is going to talk about this. How many LOs are going to talk about boosting your credit score from 720 to 740 or to get them to 760? Probably not any at all. If you do that, oh my, people love that. Example, just talked to someone on Sunday. If they get from 722, which they're at now, to 740, they will shave off $100 from their mortgage based on a $500,000 purchase price. 100, it's like 92 bucks, but call it 100. $100 because they talked to you and you told them how to get to 740. Now they might not get there, but if they do, holy crap, that's amazing. $100 less than anyone else just because you talked to them about their credit scores. If you don't know how to do that, figure it out. Talk to me. 740 is perfect for the interest rate. 760 is perfect for mortgage insurance. Talk to them about the extra stuff. Other things to do. Talk to them about 3% versus 5%. If they have 10%, look at all three of those options and discuss the differences between them in interest rate, in mortgage insurance, and how that affects their bottom line. They love to see this stuff. And lastly, just give them a really good idea, like a broad stroke about the process. What happens after you get pre-approved? What does this mean now? What are you going to do? You're going to get with your real estate agent. You're going to go find houses. You're going to get under contract. Give them the process. Let them understand what happens when you come back and when your team's back to become the pivotal piece in getting the loan into registration, getting an appraisal order. What does an appraisal mean? Take your time. They have no freaking idea what it means to get a mortgage and to buy a house. So be real. Give them extra nuggets. Take your time. And always, always, always ask for referrals. Do they have any family members buying a house soon? Are there any friends that are also in the same boat? Why don't we get connected? That would be so cool if we could all have the same mortgage guy help you buy a house. Okay, I hope that was helpful. Thanks again for having me on. Kicking it off to Mr. Kohler.
Hey guys, it's Kyle Kohler. I'm super excited to be here this week. Today I'm going to talk about structuring your daily routine using Master Your Day via the partnership playbook. Now, we have 6 steps that I like to teach my team to be able to capitalize on this and be super efficient and also just have a lot of success in this. So the first step I would like to say that we always like to focus on is focus on your relationships, not just transaction. I know we have a lot of transactions that come through. We want to give 5-star service every time, but what does that mean by focusing on the relationship? So what I try to do is I try to be very personal within my texts, my calls. I know my clients very well. I learn a lot about them in our conversation, and I know about their schedule as well. I'm very weary of what's going on. If they have to pick up kids, I'm gonna let them know, I know you're picking up kids at this time. I'll text and call you around and update you around this time. So I get to know my clients really well. I add them on Facebook, I add them on LinkedIn, and I'm interested. They want to work with me. I appreciate them so much for working with me. I'm gonna focus on that relationship with my clients and my real estate agent partners as well. Listing agent is in this transaction. I'm gonna let him know I'm gonna crush it for him on this or her, and we're gonna have a relationship after this. I wanna be available for them, so whether they work with me in the future, they see me on a real estate purchase contract, they know that I've worked with them, they know I've given them great service. So focusing on this with relationships, not transaction attitude, is where you're gonna have the most success on this. Number 2 is we like to start our day by being very proactive instead of reactive. Now, what does that mean for loan officers? They definitely know what that means. I like to use an analogy of try to work all day with little kids yelling at you or people throwing water balloons at you. There's so many things that happen throughout the day for a loan officer, and a lot of times we're just trying to get more business, but we can't control all of the reactive things that happen throughout the day, right? So if we can start our day being proactive, and this gives us a lot of lists, a good checklist for us to be able to be proactive, it helps set the tone for our routine for the chaos, right? So throughout the day, we're gonna have chaos. We know it's gonna hit. Let's try to be as proactive as early as possible and attack these. Plan the night before, plan the things you wanna post, plan the gift cards and the thank you cards. There's so many things on here that you can capitalize on. Plan beforehand in the morning or the night before so that your day is very smooth. So we're gonna start proactively on our day in the morning. So number 3, I would say, our goal is we're using this proactively, but we want to get to 100 points a day. So we try to get 100 points minimum per day on this, and we have so many tools that we can use at UMortgage. We have Loom. These other things aren't tools that UMortgage offers, but they're free, right? FREE. We got LinkedIn. We got Facebook. We got Instagram. We got TikTok. We have so many things that are free. So if you just post you're gonna get results. I had a lot of LOs in the past that have never posted. They now post and they do videos, and they're very confident now. They're doing such a good job in their videos, and they're getting business. It's really good and cool to see a lot of my LOs look at me and say, Kyle, look, I'm scraping up 2 or 3 more deals because I'm posting proactively on Facebook. I'm sharing my wins. I'm educating my clients. I'm being very positive about the market. Be a positive professional in this market. You're gonna get business. Number 4, do your research. If you're gonna be meeting with a real estate agent, here it says in-person meeting. It's one of the top ones, by the way. You get the most points out of this because it's the toughest thing. If you're gonna meet a real estate professional or financial advisor, do your little research on them. Look at MMI, look at Facebook, look at LinkedIn, see what they're interested in, so that when you go into a meeting with them, you know a lot about them, and you have a detailed plan of how you can structure that meeting. First, you're gonna focus on relationships, not transactions, right? You know a lot about them. But do your research. That's a huge thing. I see a lot of loan officers will go out with a real estate agent that may have never done business ever, which is nothing wrong with those real estate agents. But a lot of times, it's that latter part, what I'd say is the very experienced real estate agents that have had a relationship with the loan officer for 10 years. It might be a little more difficult to get through the door, but I'm still gonna talk to that agent and find an angle of how I can best service them with their deals. Maybe the loan officer they use for a while can't do some of the products that I can do. Maybe they can't close as quickly as I can. So there's a lot of things there that you wanna do your research on when you're meeting with these business professionals. Number 4, have fantastic service. So I'd like to credit a lot, I would say, Jimmy Hobson, Sean Grapevine, Adam West. They have amazing, phenomenal service when they work with clients and real estate agents. I now tell listing agents and buying agents, if you're gonna work with me, you're gonna have phenomenal service. I'm gonna close as quickly as possible, and you never have to come with me with an update. You never have to call me, hey Kyle, what's going on? I'm gonna update you throughout the entire process, and I text like crazy. Text. So try to update as much as possible and fall through on that promise. When you tell an agent, I'm gonna give fantastic service, you deliver on that. And then last and not least, and I'll let you guys go, is setting up your team for winning. Who's your team? Your loan coordinators, your processors, your closers. How did I get a loan clear to close in 3 days with an appraisal? Is because I set my team up for winning. I had the most structured, most detailed file ever. The clients were incredibly annoyed with me in the pre-approval process, but I love when they start getting annoyed with me because I tell them, I have experience. I'm a pre-underwriter here. I'm gonna make sure that you have the smoothest process ever. I'm gonna get everything up front, and I have really good detailed notes for my team because I wanna get your loan clear closed in 7 days or less. And we got it in 3. So set your team up to win. I take pride in being an excellent loan officer. I'm gonna make sure that I have a really good file that I know can close, and I'm not gonna just throw crap against the wall. I'm gonna make sure I have a really, really good file. And my goal every single time is setting up my team to win. So my processors have bonuses that they need to meet. I want them to get paid. I care about my pod. I care about my team, care about my loan officers. So set your team up for winning, and you will for sure be a great loan officer, and you'll have a lot of success. So lastly, master your day. If you don't have this, please print it, put it on your desk, and look at it every single day. And if you're not getting 100 points, it's really not that hard. You can definitely get 100 points. So appreciate you guys having me. This has been a great, great meeting. Pass it on to the next person.
Thank you, Kyle. And we're gonna run through these last 2 slides so we can wrap up for the week. So first, I want to talk about, we talked about it a little bit earlier. We're going to be in Miami with the Miami team for our recruiting and networking event tomorrow at 3:30 p.m. And just to give everybody a little context, this is something that is part of the offering that marketing and business development are going to be extending to all of our loan originators, a self-serve kit on how to set up the event, promote an event. Well, you want to do a virtual event, an in-person event. We want to give you a how-to through and through so you can do these on your own. But everything from a promotion standpoint, with the exception of a little bit of effort here and there, has come from Daniel Delatorre, who's the branch manager in Florida. And right now we have 54 people that are registered to attend. Our goal is to get to 75, so we got another 24 hours to get there. 75 register, maybe we get 50 that attend. So these are very effective, whether it's loan officers or real estate agents or financial professionals. These are things that we can control. These are things that we can host locally in our community. Networking events work. You've heard from Amir, they work. So last thing I want to talk about, this is a big one. I really would like for everybody to hone in here. So we're going to be rolling out our new report up across the entire organization on Thursday. By the end of the business day, everybody's due to complete it. And we've completely restructured this. brand new report up, and there's three topics that we're focused on for this report up. Number one is my team member experience. So whether you're a loan originator, a marketing team member, a processor, a recruiting team member, we want this question to be focused on, what impacted, what held me back from being optimally effective? What got in the way of me having my best week, what could have been my best week? Give that feedback and talk about, hey, listen, we got a project put on our plate midweek, and we had all of our priorities lined up. Then we got this thrown on our plate, and it completely derailed our ability to execute on the rest of our week. Or we're in a situation where we're understaffed. We're working on hiring an additional technology team member, and we're doing twice the work, and it's really hard to do the proactive stuff because I'm always reactive. Like whatever those situations are within what we're doing, it's all about your team member experience. What is holding you back? What could help you be more effective? What's going to put you in a position to be optimally performing in your role? So number two topic, again, you only have to pick one of these three topics to answer the questions on, is about your team and the organization. This is more focused on process. So what process is slowing your team down? What's whether it's communication, whether it's the way that we're fulfilling loans, whether it's the way that we are onboarding a team member, whether it's the way we're responding to IT requests. Like what process is holding the team back, is preventing you from moving forward on a project or a deliverable or something that's important to you, your team, your branch, organizationally within your team. This is all about process improvement. And the last one is about customer, whoever your customer is. If your customer is the consumer, if your customer is a real estate agent, if your customer is a loan originator, or if your customer is a team member, depending upon whether you're recruiting or HR or the people teams, like whoever your customer is, everybody has their own customer. What could be better? What's getting in the way of the best client experience for your customer? And this could be automated communication. It could be clunkiness in the way that you're being notified about something so that you're notifying the customer. Like there's all kinds of areas of improvement in all three of these themes. And the goal is, once you select a topic, we're going to ask you a couple additional questions to help us identify, what category is this related to? And then how would you go about owning the moment? How would you go about solutioning? What would you recommend us doing to improve, the team member experience, the customer experience, or a process? And really what we want to hear is, we want to hear the pain points. We want to identify themes. We want to identify, what are the areas within our business that we need to get focused. And this isn't about, being reactive week over week. This is about being able to take a step back at the end of the week, do inventory of everything that's coming our way, and really identify, like, hey, we're seeing a build up in our processors are saying the onboarding experience isn't teaching them the TPO portals correctly, and they're really struggling with learning the different TPO portals when they get these new loans and being able to have a resource to go train them on it. Like, okay, great, we've seen that 9 times. We got a problem. We got to go fix it. Now, these are not things that are going to be quick solutions. These are things that we're going to work on as an organization. I always tell everybody the focus here is long term. We don't want to just make it slightly better. We want to perfect the process. We want to get the team member experience to be dialed in, to be in that optimal position, but we can't be reactive week over week. We want to be able to take these takeaways, identify themes, and then translate them into solutions over time. So, we'll come back and communicate the things that we're taking from the report up each week and show everybody, hey, based upon this feedback, this is how we've changed the process, or this is how we've adjusted, our customer experience. And we'll communicate about this regularly. But report up is key. Giving that feedback is super, super key. I know everybody's busy. I'm busy. I spend a minimum of an hour and a half a week reviewing report up, okay? And I read every single thing. That doesn't mean that I'm taking everything and translating it into what we're doing. Some of it, I'm giving a call to the processor. Some of it, I'm giving a call to a team leader. Some of it, we're talking about senior leaders. Hey, did you see this? How can we get this in a better place? Like, it's not about being reactive. It's about listening to our team members. It's about identifying opportunities for improvement, process improvement, and then it's about planning accordingly for either the coming week, the coming quarter, or the following year. But keeping our focus on getting better, keeping our focus on our experience, keeping our focus on that get better everyday mindset. So please do your best to complete it by Thursday, end of the day. We'll start the process of sharing our feedback with everybody starting next week based upon this new report up structure. We're going to post on Thursday. And if anybody has any questions, please go ahead and share within the comments in that post when we post report up on Thursday. So have a great day. Appreciate everybody. Talk to you soon.